back to another episode of Ask Mike here on AMS Spotlight. I'm Joe Dallio, and today we're talking about what's happening in the mortgage market over the past week, including the recent movement in mortgage rates and the 10-year Treasury. Then we'll shift gears and cover a few questions that every loan officer can learn from, including how Mike structures his day to stay productive, how to stand out in an increasingly competitive market, and what he means when he says to become 1% better every day. Mike, welcome back, and let's get started. So we've had rates been a little crazy the past week. I mean, for the past 3 or 4 years, I would probably say. But do you think you can comment on what's going on? What happened in the last week with the 10-year Treasury, and like what happened yesterday with the market staying, with the Fed not making a move?
So, when it comes to markets, what people need to realize is that we have trillions of dollars being invested on a daily basis. And we don't really realize that when we're buying our $500,000 house or $1 million home, that Wall Street and the investors are really investing trillions of dollars, and they're trying to figure out every little advantage. For us, we may not move our money from Wells Fargo to Chase because of 0.5% in interest rate that they're going to pay us, but 0.5% on $1 trillion, well, that's a lot of money. So what they like is they like certainty. They live their life on gambles that they know are going to happen. When there's uncertainty in the market, you will see fluctuations like you've seen right now. That's really about the best way I can say it. As much as there is just that change, or people are just a little unsure what's going to happen next in the market, what winds up happening is you're going to see changes in interest rate. Now, what you saw yesterday really goes to that completely, because the Fed really came out and went, we're kind of like 9-3 whether we should have a rate hike, not a reduction in interest rate, but a rate hike because of inflationary numbers. And that tells the people on Wall Street, yeah, we're probably going to get a rate hike this year from the Federal Reserve. So we're going to start planning on that and start moving some of our money out of treasuries into something else. And of course, then you start seeing REITs start moving all over the place. It doesn't help matters that, we keep this situation with Iran continuing, regardless of what side of the political football game you're on with this. That provides increased uncertainty. And as long as we have uncertainty in the markets, we're going to see this roller coaster ride of interest rates. That's just what you're going to see. Now, interest rates will come down with bad economic news. Okay, they'll come down. That's where it is. So we have to kind of, in a sad way, if the economy does poorly, we're going to see lower interest rates. If the economy does well, we're going to see higher interest rates because there's more spending, more inflation. So as such, we know that the rates are going to go up. And that's really the political football. So that's flying around. It's a political economic football. And when the people on Wall Street don't know what's going on, and they're guessing, you've got uncertainty. I mean, that's it in a heartbeat, Joe.
Now, from a consumer standpoint, because I think there's always a lot of confusion, even with the loan officer sometimes. But obviously, the Fed kept the rate the same yesterday. But when the Fed lowers the rate, or when the Fed raises the rate, usually you'll have a rush of phone calls or emails saying, "Hey, I should be able to get a better rate," or "Hey, rates went up."
The internet told me.
Exactly.
The funny thing is that we're using the internet right now as a vehicle to get our message out, and get this conversation out to masses. But the problem that runs into the internet is that there's so much misinformation on it, because the differentiation between fact and opinion has been blurred. It's been blurred in our media. It's been blurred now through the internet. Just like I just described, we've seen interest rates kind of jump a little bit yesterday because the markets are anticipating a rate hike. So rates have gone up. When the market anticipates a rate cut, rates go down. the mortgage industry and the free markets really are doing things before the Federal Reserve makes any announcement. Very rarely, or at least very rarely in the last 5 to 6 years, have the rates taken a massive change based on a Federal Reserve meeting. They usually make their change based on what the chairman says in their press conference after they've made their decision. That's usually where it comes, because now people are forecasting what is going to happen. And that's what's going on right now. There's a forecast. The forecast is they're going to raise rates at one point this year. If they're going to raise rates, then we might as well start raising rates now. And that's what institutional lenders are doing. We might as well start raising rates now because rates are going to go up.
So is that the reason why when sometimes, they're expecting a rate cut and then also the rate cut happens and then for some reason rates go up a little bit on our side? It's because it was already anticipated?
Well, it was already built in. I mean, we generally, since 2022, when we saw all of the rate hikes, as we started to pull back and do rate cuts, those rate cuts were already anticipated in the market. So they wound up going up after the Fed made their decision because Chairman Powell at the time, his press conference was a very conservative press conference. He didn't really tell a lot of people what was going on. And again, now you get back to uncertainty. What's going to happen in the next meeting? Are they going to do another cut? Are they going to going to hold? And when the message gets delivered as a certain degree of uncertainty in the market, that's going to raise rates. I mean, whether we like Chairman Powell or we don't like what Chairman Powell did, our issue with what's occurred is never in our history have we seen so much cash dumped into the market like we did post-COVID. In order to keep things going with such low interest rates to promote spending in the economy. As such, he's kind of landed that plane relatively unscathed. It was bumpy, and for some people it was bumpier than others, but relatively unscathed did he land that plane. And now we've got a new pilot, and we'll see what winds up happening with him. As far as what goes on.
Oh, that's good information for people to know. I mean, it's every time we do have something, we all get emails and explaining it or prepping our customers before it happens is always a good thing to hopefully do.
I had clients this week who called me and they talked about, should I lock, should I not lock? And we wound up locking them on Tuesday because we didn't know what was going to happen on Wednesday. And thank God we did, because it saved them some money. That's why you want to deal with a mortgage advisor. That's why you want to talk to somebody who's done this for a little bit, has a little more gray hair than some other people do, because they've done it. They know what the Federal Reserve is going to do, and they know consumer reaction. And that's the sad part about it. Most consumers, because they hear on the news that the Fed kept rates the same, they think it's a good thing when the interest rates actually went up. And that, that's just a falsehood.
Yeah, 100%. So we're going to get into our Ask Mike portion, even though that's what everything is about us. But so real estate professionals really, we want to look at what makes a good real estate agent, what makes a good loan officer. So I thought today we could kind of focus on habits that you do yourself. And at AMS Mortgage, we've been having a lot of these accountability meetings that you've been hosting that have been teaching us a lot of these little habits. So I thought we could just kind of talk about some of them going forward. So like the first thing I would say is, how do you organize your day?
It starts with 2 plans. There's a long-term plan that is in my Outlook calendar. There's a long-term plan, so I know what comes up a week from now, 2 weeks from now. I know when important deadlines are. We're all running around now with computers in our pockets, yet many people don't use them. And if you have your dates here and what's going on, you can schedule yourself accordingly. And that's for mortgage people, for real estate people. I learned something really important about a year ago from Chris Vincent. He runs Windsor Wholesale, and he was a great mortgage originator on his own. And he told people to focus on their green time. And I didn't know what green time was when he did it, but I could tell you that green time is your time to go out and earn. And if you're not scheduling green time, you're making a huge mistake. And that means for realtors, that means, you know what, you're going to have to call. You're going to have to do some cold calls. You're going to have to, call people who might potentially be selling, or get those letters out there to people who say, I might have somebody interested in your property. Things along those lines. For mortgage people, those are times when you're soliciting realtors, or you're soliciting financial planners, attorneys, etc., who might have clients that can use your help. But if you're not scheduling green time, that's a problem. And that should consume more than 50% of your day if you want to be highly successful. I mean, that's what highly successful people in our industry do. We see them when they're cutting videos like this, or we see them when they've, put their picture up that they've just funded another house, or they just sold another house. And those things, as we all know, take, a small amount of time to do. But green time is how you get to be able to post those pictures. And I'm a big believer that if you're spending, 50% of your day or more on green time, that's going to get you to the next level. I mean, I heard an interesting stat in 2026 so far, 84% of realtors have not sold one house. I mean, we're in July. We're finishing July, and 84% of all realtors have not sold one house. So if you're in that position and you haven't sold a house and you want to, because those two things it's not obvious that you want to. I mean, let's face it. But if you want to, then the only way you're going to be able to do that is by expanding your green time, expanding your time where you're out there meeting people, talking to people about what you do. 2020, 2021 are gone. You're no longer getting business because you exist. You're not going to jump into this business and say, I'm going to be a millionaire just by breathing. That's not happening. You've got to provide valuable information to people around you. You've got to be able to tell people the truth. And sometimes the truth is difficult, but you have to be able to tell people the truth, whether they want to hear it or not. And that might get you that listing, or that might not get you that listing. But you also have to be able to ask for business. You can talk to past clients. You can talk to people in your office. Maybe you can buddy up with them and learn a little bit more so that you gain confidence, because people want to work with people who are confident. People want to work with people who are doing business. What I will tell you is that if you think AI all by itself is going to make you a success, you're wrong. It's not. Remember, AI is going to operate based on what you put into AI. And there are some very valuable resources that are there that you can use. You might be able to use it to target potential sales or potential realtors if you're a mortgage person. But it's not going to all of a sudden, hey, I'm using AI, so poof, I'm awesome at doing my job. No, you got to get out and hustle. That's the bottom line. It's old school time now, and you got to get out. You got to get out and hustle.
You got to differentiate yourself from AI, because I think a lot of people right now, at least in like the millennial generation, we know when somebody's speaking to us without AI. We know when somebody's posting something that was AI generated. And like for me personally, it makes me less interested. I love YouTube, for example. I learn most of my stuff from YouTube. The moment I start hearing an AI voice or something that clearly didn't have any human like guidance in it, I check out. I think
Yeah, and I think that, Joe, I think that there's a lot of valid points right with that. I think we're in such in a time period historically that we're hearing people are telling us what they believe we want to hear. And we've got to use our brains to establish whether or not it actually makes sense and it's legitimate. And, anybody who takes any amount of time to playing with AI, you can have AI debate two sides of the same story and give you all the valid reasons why from both sides of the same story. And you can make it very one dimensional where there's really only one real true answer, but you can still have AI debate both sides of a story. So I would just tell people, ultimately, if you're a realtor or, you're a mortgage professional, we have to understand one thing. We all deal with consumers. Consumers are making the biggest purchase of their lives for the most part. Either it's, and that's even the person who's downsizing because they're trying to get security. They want to downsize into something smaller because it's a little more secure for them. And the other people are buying their dream home or what potentially could be their dream home. And we have to understand that they want to hear from us. They want to hear human interaction, the hand holding that goes along with being a professional in our industry versus, the kicker now for real estate is, I want to go find, I want to go, I want to buy a house. And the realtor says, go online and tell me what houses you want to look at. The great realtors, I can almost guarantee the great realtors, and I'm not one. So anybody who wants to tell me I'm talking out of turn, I'll sit back and say, fine. But I got the realtors I've talked to who are really good. They listen to what the consumer says, and then they start coming up with formulating ideas that they think are going to help the consumer. And mortgage people have to do the same thing.
Yeah.
There's no two ways about it. What is your end goal?
So we talked about green time, right? So another thing that you talked about in our meetings was also the importance, and green time is essentially time blocking, but time blocking things on a priority level. So I started doing stuff like that, even time blocking how much time I'm going to work on a mortgage loan file, or time blocking, hey, I'm going to work on our website or something like this between these hours. I found it to be very effective. Is there a certain time of day that you personally say, hey, I'm going to work on files, I'm going to work on admin stuff that I have to do for the company versus I'm going to work on building the business?
So where I do things are a little different. First of all, for today, today's started yesterday for me. I don't start Monday on Monday. I start Monday on Sunday night. I start Tuesday on Monday night. And it usually comes down to notes and ideas. And I literally just put together a pad and I start jotting down notes the night before. These are notes of things that have to be accomplished. What needs to be accomplished? Because if you didn't write that, you'd probably be at your desk 24/7, and you can't have that because you have to have a quality of life. As a mortgage professional, as anyone in the real estate industry, look, anybody at any job, we don't work 24 hours a day at any job. You have to have a quality of life. Otherwise, it's not worth working. So I wind up writing a list out the night before. And these are things I want to accomplish. And I've done this for years. What do I need to accomplish tomorrow? And when I get to it, see this side of it, I start crossing things out, as I do them. Now, where I fit that into my time blocking is my time blocking schedule is pretty well set up so that the first thing I do every morning is I need to know what employees need from me that day, because they didn't tell me that the night before. So for me, my first hour of the day is employee help, confidence with talking to people, giving advice at that time, or taking care of things for employees. So usually first thing in the morning, I'm taking care of that. Those are my first bunch of hours. I don't originate loans that much anymore myself. I do it occasionally to stay sharp. I also do it occasionally to see what the markets are doing and to be able to help educate employees, because that's my primary focus at this point, is to help employees do better assuming they want to, and I hope they do. So for me, part two of the day, once I get done with that, is I start tackling the problems of the day. In a nice way, there's problems every day. I mean, if there's no problems any day, then I'm kind of bored. So there's things that I need to accomplish, and there's long-term goals and there's short-term goals. So for me, I block out different times. Now, for loan officers, I wholeheartedly believe that the first part of every day, you should be looking at all of your loans in process, and there are fewer and fewer mega producers like there once was. So you probably could look at every loan in process within an hour and a half every day, the first hour and a half of your day. And from there, I would probably go into part two of what that would be, is what files have locks expiring, or what files have appraisals need to be coming back. Because these are things that you can easily follow up on that you don't. You assume your processor's going to. And processors, by and large, they get a lot of grief in our industry, but they're good at what they do, but they're not perfect. And they have many more files than you have. For every deal one realtor has, and we already 84% haven't sold a house. So 16% of realtors have sold a house. And that number grows a little bit higher from mortgage people to closer to 25% of mortgage people have written mortgages. So, and obviously every processor has loans in process, otherwise they wouldn't have a job. So the realtor has more focus on one transaction than a loan officer does. And a loan officer has more focus on one transaction than a processor does. So you, as the loan officer, you can help your team out by looking at that file on a regular basis and going, lock's going to expire in a couple of days. Do we have all the conditions we need? Let's make sure that lock doesn't expire, because we've already talked about the markets are a little up and down. It's a roller coaster. We don't want that lock to expire. And then you can go back to the realtor, or you can say, is the appraisal back in yet? You can get a status on the appraisal, and then you can tell your realtor when to expect it. This makes you better at your job than your competition. There's no reason why you shouldn't do it. So that's what I would probably focus the first 2 hours of my day on, is loans in process, and then little follow-ups that I can do. And then from there, I'm in green time. I'm in green time from about 11 to 3 every day. And, I'm pushing green time. That gives you time to take people to lunch if you want to go out to lunch. That gives you time to follow up and set up appointments. That gives you time just to talk to people. Those are all your green time. And then at the end of that green time day, because hopefully people have given you scenarios or situations or thoughts, you may want to talk to some of your wholesale partners, to myself, whatnot, about different programs you're able to do, so that now you've got more things that you can learn about that night, so that you can use it for tomorrow's green time. Because you also want to learn about products that might be able to help you. And there's more. We're at as many products now as we had prior to the mortgage crash in 2008. There are so many products out there to help consumers that it would be really odd if you couldn't help somebody get a loan in today's day and age.
Yeah. Yeah, I think the education has been huge, and that's why, even at the company, you've been pushing these meetings with our wholesale lenders every week. But even with us listening, even with us building our own AI system for the loan officers, there's still stuff that comes up that I didn't even know. Like this week, I had a client I was bashing my head over, and I called up one of our loan reps, and they're just like, "Oh yeah, you can do this. That can be done. We can, if they have this much equity in their house, we can not count their present housing payment as long as they have 20% and they're showing it listed." I'm like,
Joe, there's so many products right now. There's so many different ways you can help a consumer, and the tried and true traditional. I mean, I did a scenario, and I used AI to help me with it. I mean, because again, why not? If it's there and it's going to help you. And I essentially said, what is a better loan for a consumer? All things being equal, what's a better loan? And I use this as an example in our meeting, is a 20% down conventional buyer. Is that better for the consumer? Now, I didn't say for the seller, and I didn't say for the realtor, and I didn't say for the property. I said for the consumer. Is a 20% down conventional loan better or worse than a 3.5% down FHA loan for a consumer? Now, the 3.5% down, because it's substantially less money down. So the payment's going to be a lot higher. And I used a scenario where the payment was about $1,000 a month higher. And the break-even point between the two was like 11 years. I mean, think about that. If you've got 20% to put down on $800,000, that's $160,000 in down payment. If you put 3.5% down, or for that same $800,000, what are we at? $28,000?
Yeah.
Okay, $28,000. The difference in the two, the $1,000 difference in the month, you're looking at right then and there 130 months. That's over 10 years. That's over 10 years. Now, assuming you're comfortable with the $1,000 a month more payment, but that's over 10 years. Take the difference in that down payment. You're talking about 150 grand, approximately 150 grand, and invest that in the S&P 500 or whatever vehicle you want. I'm using the S&P 500 because they've only had 3 loss years in the last 50, and they average over 10% a year over the last 20 years. But if you put that in the S&P 500 and put no other investment in, you realize that you'll have $460,000 in your bank, in your account in 10 years. So in 10 years, you paid $1,000 a month more. Okay. Going to cost you, that's your break even point. It's going to cost you $150,000. But if you invested that same 150 that you had in the S&P 500, you'd have $469,000. You'd be well on your way in paying your mortgage off in 10 years.
I think one of the saddest things that they don't really teach, or at least kids don't pay attention to in high school, is how compound interest works.
Very, very, very powerful mechanism. And, it's you start learning how compound interest works. Unfortunately, when you start getting a few grays like I have, and you start thinking about how long you're going to work for the rest of your life, how long you're going to work, and is it going to be the rest of your life or not? And you're saying, if I put away how much money when I was 25, how much would I have now? Really? And that's when you say, wow, did I miss the boat? And that's why I look at people right now, and I can tell you that from a financial standpoint, if you had the 20% to put down, you're much smarter not putting it down and investing it in the markets. Again, if that's what you're comfortable with.
Yeah.
And people have to be comfortable with that. If they're not comfortable with that, then put the 20% down. A good mortgage advisor doesn't tell you what to do, but rather gives you options and helps you formulate a game plan.
Yeah.
Then it's up to you to follow it. At the end of the day, you're the consumer. You're the one making the mortgage payment, not me, not your realtor, not your attorney. You're the one making the payment. You have to be comfortable with it. But the advantage is you could always refinance later. A lot of people who bought houses 3-4 years ago put less than 20% down, invested that money, and now we're in a situation where it's built up enough equity where they can remove the private mortgage insurance. We read private mortgage insurance is bad. But in my example, you have $1,000 a month more in a mortgage payment, and at the end of 10 years, you have $450,000 sitting in your bank account.
Yeah.
I would take the $450 every day of the week and twice on Sunday.
Nice. So, and we did touch on some of this, but we're still going to go into the second question. more loan officers, more realtors, where it seems like we've been fighting for fewer transactions. And everybody has a gimmick. Oh, we have the lowest rates. We have the best service. What really makes you stand out when everybody's offering the same thing?
Well, I mean, look, Joe, I think on this conversation alone, you've heard it, which is I'm giving you a lot of data to consume to help you formulate a game plan for your life. I'm not telling you that my game plan is the best game plan, but a mortgage is not a commodity. It's not like getting a gallon of milk. It's not like buying a gallon of gas for your car. It's your roadmap to potentially generational wealth. And, you can sit here all day long and say, I want the cheapest, best, whatever. We'll put more money down, and you'll get the lowest payment feasibly possible. And there are many occasions where the lowest payment is not your best option as a consumer. So your mortgage representative that you should be talking to, and quite frankly, you should be interviewing as a consumer, you should be able to answer questions for your consumer and by listening to them. Many, many people do not listen. I use an example in today's day and age that there are two types of mortgage originators and the divide is getting greater. There is what I call a mortgage advisor, which is how I learned. So that's what I do. I sit here and I want to hear what your goals are. What are your goals? How long do you want to live in the house? Is this house potentially going to become a rental property for you in the future? Are you looking to, is this a short-term or a long-term venture for you? What are your goals financially outside of this house? What can we do? Those are kind of the things I look for to hear from a consumer. And again, I don't ask them those questions. I listen to what they tell me. And then I say, these are the mortgages that I think are best for you. But you have to decide for yourself which one you think.
Mm.
Then there's the person who, what I call is more of the order taker. And again, the world needs both. I don't think one's better than the other. I think we're getting many, many, many more order takers now in the world because it's easier. You call them up and you say, I saw you're applying for a mortgage. What are you being quoted right now? Okay, I'll be cheaper. Cheaper is not always better. You're missing the opportunity of building wealth because you dealt with somebody who gave you no advice whatsoever, but rather just took your order. Now, for you, the consumer who believes everything in the internet is true and accurate and it hasn't steered you wrong yet, and that's the way you want to deal with things, have at it. I think that's great. You found that resource for you. But in today's day and age, these things are getting more complicated and there's more choices, and you don't necessarily know what your best opinion is, or your options are, and you don't know them in concrete numbers. I think you need to deal with a mortgage advisor. That's what I think you need to do. But that's what I think separates a lot of people right now. You have to decide as a consumer whether cheapest is best. And cheapest isn't always fastest, and it rarely is the best. Used to be a line where they would say, good, cheap, fast. You can have two, but you can't have three. You know what? It to a lot of ways, it still exists in today's day and age, and you have to decide which one you're willing to give up.
Right.
Or which one you're allowed, and again, I think if you're a controlling individual, that's your personality, then the order taker mortgage rep is the best mortgage rep on the planet for you. But you have to decide who you are before you start interviewing other people and what you're looking for in a profession.
So I've heard you say and I've heard you say this a lot of times. You should try to be 1% better than you were yesterday. So, what does that actually mean? How does that apply to your life?
Yeah, it's something that resonated with me. I had the pleasure, and I've had the pleasure of having some good friends, some old friends that uh, worked at EPM Mortgage. Phil Mancuso, who's the president of the company, El Presidente. Um, he works over there, and I met his partner Eddie Perez, and Eddie really preaches 1% better every day. And when I first heard it, I was like, what a novel idea. I almost treated it as a novelty. Um, and then I really thought about it a lot. And I said to myself, being 1% better a day isn't hard. I mean, it really isn't hard. It's not even completing one more thing every day. I mean, it can be as simple as thinking of a new idea every day. But being 1% better is not difficult. But remember, we go back to that compounding of interest. If you're 1% better every day and you do that for a month, 30 days, you're actually 37% better than the way you were at the beginning of the month because it compounds.
Yeah.
And it's not difficult to do to be 1% better every day. And I said, wow, this is really powerful if people do it. And again, the one thing that I can do and the one thing that Eddie can do, and Eddie did something and that 1% better he did, and he probably doesn't even know it, is that he made me better. So that in itself was a success for him that he didn't even know. And I think where we look at things is we want to quantify. We all want to quantify what we do on a daily basis. And there's time for that. And there's certain things we should quantify. But if you're 1% better every day, you easily will see the results. It's not very hard. People talk about dieting. Everybody wants to diet. We're past the midway point of this year. Soon enough, the holidays will come through, and soon enough, everybody will have their New Year's resolution to lose weight. And they'll put a number to it. I want to lose 10 pounds, 20 pounds, 25 pounds, whatever the number is. Imagine if you just said, I want to lose 1%. I want to lose 1% of what I weigh right now. 200 pounds, that's 2 pounds. When you reach that goal, now I want to lose 1% of that. It's not hard to lose 2 pounds. It's hard to lose 25 pounds. Yeah. So the 1% better every day, you will become a success. Now, the problem we run into is we all want to take the break. We all want to run out, just like every diet we've ever done. We all want to run out and we're going to do this crash binge diet. We're going to stab ourselves in the stomach with something. We're going to do all that stuff because we're Americans and we want instant gratification. I get it. I'm the same way. We want to do that. But if you take the baby step method, the 1% method, you're actually going to get results that are going to be sustainable.
Yeah.
It's going to be sustainable because you've conditioned yourself on a new way of life. As I said, this 1% is really powerful when you get into it. When you really buy into it and dig deep, 1% better every day can be immensely powerful for you. But it starts with, look, I don't like doing videos. I don't like my voice. I don't like the way I look on camera. But you know what? If this video touches one person, like Eddie's video touched me, guess what? I've helped somebody else be successful. Thus, I've helped my 1% be better. Just imagine a world where everybody's working to be better every day.
So it's like sorry.
What would that world be? It would be a great world.
It would be. So you're saying it's almost like it's more like an easily digestible way to get past your own limiting beliefs. Because like, for me to be like, oh, I need to lose 50 pounds, or I need to make sure I'm closing 30 deals a month like some of our other loan officers, it just doesn't seem possible. But, by taking a tiny little bite of it, then I get past my own like, oh, I can do that.
One of the biggest problems in this industry is new loan officers or relative rookies believe that closing 1 or 2 loans a month is being successful. Okay. And I think, if you're doing it on a part-time basis, yeah, it is successful. It is successful. If you're dabbling in the mortgage business, that's successful. But you're also limiting your growth. And that person who closes, no loans, they should be trying to close 1 loan. And that person who's closing 1 loan should be trying to close 2. And the person who's closing 2 should try and close 3. Eventually, there becomes that point of diminishing returns. But there are people out there closing hundreds of loans a month with small teams. And that didn't happen overnight. That didn't happen overnight at all. They put the time in. They developed their talent. They talked to people. They didn't just zip out a text. They didn't just post that they just funded something on Facebook. They actually talked to people. And, it always blows my mind when people are on social media and they've just funded this loan. We get that picture, just funded, and they show a picture of a house.
Yeah.
And again, I think it's valuable, and I think you have to talk about your successes. But I also want to know why aren't you calling people up and telling them that? On social media and Instagram and whatnot, and you can post whatever you want and people can ignore it.
Yeah.
They can ignore it. But when you call them up on the phone and talk to them, or you walk into their office and say, hey, I just want to let you know, I just closed this house down the street. I'm the person who did the financing and arranged for the financing on that property. If you have any questions, I'm here to help you and help you be able to sell that house, because quite frankly, it's right down the street from your office. You should have had that listing. Now, again, I wouldn't say it like that to somebody, but my point is, these are things that you can actually do to show people how good you are at your craft. And it takes just a little more effort than posting something on social media. That's all it does. And that's that 1%, Joe. That's, again, if we're all 1% better, you will be very good at your craft, and you will not have to worry about where your next loan comes from if you're 1% better, regardless of the economy.
Yeah, that's fantastic advice. And that's going to be it for us today, folks. As usual, follow us on Instagram, Facebook, YouTube, TikTok, probably soon. We don't know. We're getting in there soon. Mike, thanks for all the great advice today, answering all the questions. And we do these typically bi-weekly. So we will see everybody at the next one.
We'll see you in 2 weeks. We'll talk about it. We'll talk about it again. We'll talk about what we can do to help loan officers and realtors grow their business internally at AMS, because I think that's of value for them too. They need to know, tools that they have that they may not even know they have. That's the sad part.
Yeah. All right. Thanks, everyone. And we'll see you next one.